Factory activity is still on the rise, even if the PMI slipped to 52.0 from 53.0. But hey, it's still above 50, which means we're in expansion territory. New orders are ticking up, showing some positive momentum. Output has slowed a bit, but that's not necessarily a bad thing. Inventories are building, which is a sign of healthy demand. Let's call it a cool down, not a crisis, folks. We'll see if the Fed's cut gives us a boost in the coming months.
The second point that you brought up this week was about manufacturing growth, but let me end with one point about AI. Is the data is very credible that if we did not have the data center investment that we have right now, and I'm going to add on to that the impact of a buoyant stock market, we would be in negative GDP growth at this moment, and we might be in negative jobs growth. So this is what I'm saying is when we finally tip the scale that the big hyperscalers go, you know what, we got enough for the next month, for the next year or whatever it is, just takes a step back, we will go into a recession. Now, looking 3 years out, I posted this on Twitter the other day. The good news is the Federal Reserve has 400 basis points worth of cuts in front of them, which I think they'll do in 2027 and all that. But we got a long ways to go from there. But let's talk about this. You pointed out that manufacturing growth is continued, but it's at a slower rate. Why don't you dive into that with your thoughts? What's going on there?
Yeah. So what we're talking about here is the PMI, that stands for Purchasing Managers Index. For people who don't follow economic news on a daily basis, it's just a monthly indicator derived from surveys of supply chain managers across multiple industries. And it gives us a sense of how much manufacturing activity there is in the United States. Values above 50 indicate expansion, meaning it's growing. Values below 50 indicate contraction, meaning negative growth or slowing. So what we had last week was the flash PMI, which is the preliminary estimate. And we all know how accurate the government's preliminary estimates are, but it slid slightly to 52 from 53. So, the headlines were, oh no, the PMI is sliding, it's going down. And, my response to that is, no, we're just getting slightly slower growth than we had before. But, that doesn't sell newspapers or clicks. The other news on this that I thought was kind of interesting was new orders increased a little bit. Production gains existed. They were just a little smaller than August. And some of the surveys in the index indicated a buildup of unsold inventories because sales softened a little bit. But again, still growing. What I wonder about, and I don't know this for sure, is I wonder if some of that is related to tariff fears, which were companies temporarily over-ordered. They were worried about it. On the issue of tariff fears, I'm going to point out that last April, the fiat economists were hysterical, saying, oh, we're going to have a depression because of this. We're going to have a global recession. We're going to have empty shelves because all manufacturing is going to stop. Guess what? Not only do we not have empty shelves, we have a buildup of inventory. It's the exact opposite. I've yet to see one of these fiat economists say, okay, yeah, we apologize, we got it wrong. They're still insisting they're right, which, good luck with that. The only other thing that I would add to this, actually two things. One, this data was produced before last week's Fed rate cut. It'll take a few months for that to work its way through the system. So it'd be interesting to see if the Fed's rate cut leads to an increase in manufacturing. And then, I was pointing out on Twitter or X this morning that, 2 weeks ago, everybody was saying, oh, government data is inaccurate. We can't use it. The revisions are gigantic. It's useless. And somehow this week we're all at, oh no, if we have a government shutdown, we won't get the data. Okay, guys, which is it, right? Is the data inaccurate and useless, or you desperately need it to invest? And my view is we do not need inaccurate government data. We'll all be fine. Like Enrique, you were talking about all of the various events that you've lived through and traded through and managed money through. How many government shutdowns cause a real problem?
Yeah, look, the media exists to get you to click on something new. And the concept that we're just in a bull market, money supply is growing, GDP growth is good, the market's going to grind higher, is not particularly clickable versus any given piece of government data that drops at any given point is. And so we put very little into any short-term government data. I think so. I think that's just a general rule. If it causes dislocations, you probably want to fade that dislocation, take the other side. But we kind of ignore it. And what John Griffin, the manager of Blue Ridge, which is one of the most famous Tiger Cubs, perhaps the most successful Tiger Cub of all time. Tiger Global was a Grand Cup. It was Chase at Tiger. I forget. Anyways, I would still say Blue Ridge was more successful. He once told me, he goes, look, if you're that concerned with your portfolio, if you're that concerned about a single macroeconomic report, you shouldn't be concerned about the macroeconomic report. You should be concerned about your portfolio construction. And so, that was an eye-opening moment for me 30 years ago. But it does bring up a subject, which is what is happening in manufacturing growth. And, look, I think there's a lot of cross currents. And overall, I believe, I think we're looming on a recession. Again, is that I think that once the data center investing peaks, and it will peak, everything peaks. Every capital cycle in the history of humanity has peaked. I don't care what Jensen Huang says. Every one of them, once it peaks, we will likely go into recession. But that being said, there's plenty of positives, and I think they're kind of non-issues right now. So I think it's interesting to watch. But, the AI situation is 10 times whatever's going to happen with core manufacturing at this point.